Global markets tremble as Trump's trade war escalates, a $918 billion blow. The global economic landscape is shuddering under the weight of President Trump's escalating trade war. A new wave of tariffs, impacting billions of dollars in goods, has slammed into effect, triggering immediate market turmoil and fueling concerns of a protracted global recession. The move represents a dramatic escalation in the administration's protectionist agenda, jeopardizing established trade relationships and potentially unleashing devastating consequences for businesses and consumers alike. The hammer blow landed particularly hard on Canada and Mexico, the U.S.'s two largest trading partners. A hefty 25% tariff has been levied on a staggering $918 billion worth of imports from these nations, a move that has sent shockwaves through North American supply chains. This unprecedented action targets a vast array of goods, from automobiles and agricultural products to manufactured components and consumer electronics, effectively placing a significant tax on essential goods flowing across North American borders. China, already embroiled in a trade dispute with the U.S., also found itself in the crosshairs. The administration doubled down on its previous tariffs, raising the levy to a punishing 20%. This escalation builds upon existing tensions, further restricting the flow of goods between the world's two largest economies. The combined impact of these escalating tariffs paints a grim picture for global trade, raising the specter of a full-blown trade war with far-reaching consequences. The business community, both within the U.S. and internationally, has expressed grave apprehension over the long-term implications of this aggressive trade strategy. Concerns over supply chain disruptions, increased production costs, and diminished consumer purchasing power are widespread. Businesses are facing the daunting task of navigating this turbulent environment, forced to grapple with rising import costs, potential production delays, and the ever-present threat of retaliatory tariffs from affected countries. Economists have issued stark warnings about the potential fallout for American consumers. The Peterson Institute for International Economics, a respected think tank, has estimated that the combined impact of a 25% tariff on Canadian and Mexican goods and a 20% tariff on Chinese goods would represent the largest tax increase in at least a generation, costing the average American household over $1,200 annually. This estimate does not account for the potential ripple effects of retaliatory tariffs or the indirect costs associated with supply chain disruptions and reduced economic growth. The predicted increase in prices for everyday goods could disproportionately impact low and middle-income families, further exacerbating existing economic inequalities. While President Trump has framed these tariffs as a means to bolster American industry and lower prices for consumers, the reality is far more complex. The imposition of these tariffs has already triggered retaliatory measures from affected countries, creating a vicious cycle of escalating trade restrictions. This tit-for-tat exchange threatens to undermine global trade flows, stifle economic growth, and ultimately harm American consumers. The president's promise of reciprocal tariffs, slated for implementation as early as next month, adds another layer of uncertainty to an already volatile situation. This escalation further destabilizes the global economy, creating a climate of fear and uncertainty that could hinder investment, dampen consumer confidence, and ultimately lead to a global economic slowdown. The implications extend far beyond the immediate impact on specific industries, potentially triggering a domino effect that could cripple the global supply chain and severely hamper economic growth worldwide. The coming months will be critical in determining the trajectory of this escalating trade war. The international community anxiously awaits the outcome, hoping for a resolution that avoids a prolonged period of economic instability and global recession. The question remains, will cooler heads prevail, or will the Trump administration's protectionist agenda plunge the world into a deeper and more prolonged economic crisis? The consequences, for both the U.S. and the global economy, could be profound.